Hey, what's up, everybody? Back again. This is Trent T. Daniel of Mastering the Markets, I guess with Mastering the Markets, here to make sure you don't become a broke ass trader, because that's what this video series is all about, making sure that we keep you out of the broke ass trader zone. So thank you very much for tuning in. Before we get into this segment, I'd like you to please hit that like, subscribe, and notifications button. The like button says that you're loving this content, sends a great message to me and my team. The subscribe button lets YouTube know that you're really interested in this content and you're got content and you're enjoying it. And the notifications button will let you know when we upload new material. I want to start off a series right now called the Big Money series. Okay, this is all about the institutional money, and the first thing that I've got to do is work with you to help adjust your mindset, because if we adjust the way you think about trading, then we can help you really get into the position where you will be profitable. So let's jump into the screens real quick and let me show you an example of what I call the big money. Okay. So I have got a British pound, a New Zealand dollar chart pulled up right here. And the other day I did a video about these wedge formations and these ascending channels. Okay. So this is an ascending channel. And basically what it means is that we've got price going up, achieving higher highs and higher lows, and it's going at a very good rate, a lot of momentum behind it. As you can see, this is pretty steep angle, and then it starts to level off and consolidate. Now, usually when that happens, that is the sign of a reversal. Okay, doesn't mean it's going to happen definitely, but as you can see, I marked this up, and yesterday it was right up here, and I went ahead and took in a position high, anticipating the drop, and the market has certainly dropped, and I'm doing really well on this so far. Okay, now let me help you with just a quick adjustment to your mindset. Forget about support and resistance. Okay, just get that concept out of your head just for a moment, because I know that what I taught you initially is find your support and resistance zone, mark those up, yada yada, so forth and so on. That's important, but it's not important for this lesson. Okay, the reason it's not important for this lesson, because support and resistance is an effect driven concept. Okay, buyers and sellers is a cause driven concept. And I want to focus on the cause, because if you understand the cause of support and resistance, it will help you better understand how to play and how to look for and how to analyze support and resistance. So remember, I told you that this price was going up at a steady clip. It's going up. Well, what's really happening here? Okay, why is this price going up? Well, the simple reason is because more people are buying than people are selling. Now, when I use the word people, I use that very loosely. This is not people, okay? I am people. You are people. We are individuals sitting on our computers trying to etch out a living or make some extra money in the Forex world. I'm talking about institutions, okay? Because there's no one individual or no one group of individuals that have the power to move these markets, because these markets trade $6.6 trillion a day. Trillion, not billion, trillion. Okay. That is ungodly amounts of money. And so when we get in here and we look at this from the standpoint of, oh, well, buyers are buying, listen, it's institutional money. So let's just flip things around and not think like a trader or an individual, and let's think like an institution. Okay. So if I am an institution and I have 4 million clients, okay, and I have all of them in a position, and that position is going up and up and up and up and up. Now, why is it going up? It's going up because retail money is flooding into the markets, okay, and that stimulates the institutional movements. So the retail money floods in because what do they teach us? Buy low and sell high. And if a price is moving good, it's on a good uptrend, then this is where you want to take this. This is what we've all been taught, is to buy when the price is going up. Well, guess what? Wherever it originated, wherever that price increase originated, I guarantee you there's institutional money that was put into these positions. And then guess what? The retail markets start to follow. And this is why you have this ascending price here. But at a certain point, things start to level off because the retail money kind of gets thin. Okay, it starts to run out. So that demand starts to subside. And that's why the price starts moving sideways like this. But at a certain point, those people, those institutions that have those 4 million clients, and they're all in this position right here, guess what? They want to ride the ride all over again. So what do? They sell out of those positions, and that causes exactly what you're seeing right now is a drop in the marketplace. Now, how do they know to sell out of those positions? Because the retail demand has gotten low because their money has run out pretty much. Okay. So now they're in positions and they're looking to either hold and let this thing go up, or they're looking for a place to sell also. So once the institutions see, okay, things have subsided a little bit, let's get our people out of these positions so they can get on the Ferris wheel all over again. Look what happens. And as you can see, the price continues to drop. And this price will drop and continue to drop. Then it's a matter of determining what levels will it drop to. But remember, when the institutional money starts to take profits and sell into the markets, that stimulates these drop offs. And then all of a sudden, what you have, the retail market starts to follow, and that's when price starts to go down. It is a constant up, down game. But the real power and the real force is behind what makes prices go up. It's always easier for prices to fall than it is for them to go up. That's just the way it is. Okay. But most of your winning trades, if you go and look at your charts, most of your winning trades are going to be on the long side as opposed to the downside. There's just tends to be a little bit of a long side bias in the markets. Okay, a lot of times. So what you have here is that when these prices start to drop, it means institutional money is moving out of the position. So it starts to drop. Doesn't mean it's not valuable anymore. It doesn't mean the whole world is ending. It just means the institutional money wants to do it all over again. So what have they done? They've taken profits for those 4 million clients that they have, and they say, hey, you want to buy another ticket to go on this ride again? Well, once we profit take, the market goes down, it goes down, it goes down. And then all of a sudden you see it hit a major level of resistance. Okay, I'm sorry, a major level of support. And that would be right here, because that's where a major reversal happens. So this is now a support level. As a retail trader, you're looking at this and you're saying, oh, this is a level of support here. So what do I want to do? I want to wait till the prices get down here and then I want to buy. Okay, makes sense, but I don't want it to break through that level of support. Well, think about this, okay? All the way up, you have buying, 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 buying. And so when you have buying, you have people setting stop losses. Let's just look for an example here, okay? So if I get in on a trade right here, I want the price to go up, but I'm going to set my stop loss probably somewhere here, okay? So if the price starts coming down, and I wrote it all the way up here, guess what? I might hold, but then I start to sell, take profits, and then it hits my stop loss. And just think about all these stop losses that are hit all the way down here. Well, what do stop losses do? They free up inventory because those are people selling. They're letting this go. So if I'm a big institution and I've got 4 million clients that each of them wants to get into 20 lot sizes each, that's a pretty big order. Guess what? I want to buy as low as possible. So what I do is I drop. And then guess what? All the retail traders are looking at this level of support and they're saying, okay, once this gets to the level of support and then I see that green candle going up, then that's when I start to buy. Well, guess what the institutions are thinking? Institutions are thinking, yeah, okay, well, we've got something here. Let's go ahead and make the price dip down to here or down to here. And that's why you see sometimes those quick little spikes where the price rate, because it takes everybody out of their positions. So if you're smart, you're thinking like the institution and you're not just looking at levels of support and saying, oh, I'm going to just look for a green candle here. What you're doing is you're thinking, okay, if I'm willing to buy here, okay, if this is where I'm willing to come in at, doesn't it make sense for the institutions to drop below that? Okay, and get better prices. So then it comes back up. And that's why you see that spike and then it comes back up. And then guess what? Everybody's jumping in right here at this level of support. Excuse me. So as we go through in this series, I want to work with you to change your mindset. And I just wanted to do this quick video just to give you a concept around the cause of support and resistance as opposed to the presence of support and resistance. In the next video, what I'll actually get into is the institutional mindset, why it makes sense as far as the way institutions think, because retail traders think like this: buy low and sell high. Well, okay, institutions think that way also, but it's like this. Let's just say you shop at Walmart. You do your grocery shopping at Walmart, okay? And you have a family of two, all right? Okay, yeah, you can pretty much afford, you can afford grocery store prices. But what if you have a family of five? What if you have a family of 10? What if you have a family of 100? You see, the place that you shop has got to be even more discounted than the place you, as a person with a family of 100 to feed, as opposed to a family of two, because you're buying in such volume. So that's where you start going to Sam's, and then you say, okay, well, I've got too many mouths to feed now. So I've got to go to a wholesale network. So then you go, you see, and then you go start going for lower and lower prices. That's exactly what the institutions do. They're looking to buy low and sell high, but I guarantee you, whatever we consider low, they're considering high. So they have the power to move the markets in the direction they need them to go. So that's why most retail traders, while they're looking at support and resistance, experienced people who think like institutional traders are looking below support and resistance. We're looking at those absolute rock bottoms, and we're setting buy orders in order to take those positions when the price goes down there. Okay. So we'll get more into that later on, but I just wanted to share this with you real quick to start getting your mind wrapped around thinking like an institution. In the next video, again, we'll talk about some of the concepts and the logic behind buying low and selling high. Thanks so much. Thanks a lot. Thanks so much, guys, for tuning into this. And remember, hit that like and subscribe button and the notifications button so you can be notified when we deliver more content. We'll see you later on. Take care. Bye-bye.